Hi, everyone. Welcome to your March 2026 real estate market update brought to you by the Reby Homes team. Let's start with a quick look at national housing, starting with home sales. We saw existing home sales slow in January, which is completely normal. January is historically one of the slowest months of the year nationally because buyers and sellers are coming off the holidays, weather impacts mobility in many parts of the country, and people are resetting financially after year-end spending. We're already seeing February and spring rebound, however. Lower mortgage rates are bringing buyers back into the market, and we typically see activity pick up as families begin planning moves before the next school year. Now let's shift to the biggest driver of housing demand, mortgage rates. Rates have dropped to their lowest levels in about 3.5 years, and this is largely due to inflation stabilizing and softened economic growth. When inflation cools, the bond market improves and mortgage rates often follow. Lower rates improve affordability, which means more buyers can qualify, and that typically increases competition for well-priced homes. As for the economy, unemployment is still holding relatively steady around the mid 4% range. This matters because housing depends heavily on job security and consumer confidence. However, we're not seeing major job losses nationally, which is helping support continued housing demand. GDP growth did slow towards the end of 2025, and a big factor for that was the government shutdown. And that weaker growth is actually one reason rates have come down. But it's safe to assume the Federal Reserve will be cautious about tightening them any further. Another topic worth mentioning is home purchase cancellations are at record highs. This reflects buyer sensitivity. Many buyers are being extremely cautious due to affordability pressures, inspection issues, insurance costs, and just overall uncertainty about where rates will go. We're seeing more negotiations, concessions, due diligence, and fewer rushed decisions compared to the pandemic market. At the same time, inventory is making a comeback. Active listings are rising nationally year over year. This is due to several factors. Many homeowners are adjusting to the reality that rates may stay higher than the historic low pandemic rates. Some are moving for life reasons like job changes, family needs, downsizing, while others are deciding they can't wait indefinitely for lower rates. More inventory means buyers have more choices. But it also means sellers need to price strategically and focus on good first impressions when it comes to showings. That means investing time or money into making their home as presentable as possible. And one final seasonal point, homes typically sell faster in the spring. Days on market usually drop significantly between March and May as buyer demand peaks and new listings hit the market. Bottom line, nationally, we're moving into a more balanced and strategic housing market. Rates are improving affordability, inventory is rising, buyers are active but cautious, and spring momentum is building. This is no longer a market driven purely by frenzy. It's being driven by opportunity, timing, and smart decision making. Now let's take a look at our local market trends here in the Phoenix metro area. While national trends set the tone, local supply, demand, and pricing dynamics are what truly drives decisions. Right now, Arizona's in a transitional phase. Seller concessions are still elevated. More than half of all closings, or 52%, are currently including seller paid concessions, with the median amount being around $10,000. This tells us that affordability is still a real issue, and buyers are asking for rate buydowns, closing costs, and repair credits to make the numbers work. It also tells us that sellers are willing to negotiate in order to get deals across the finish line. Bottom line, we're definitely seeing more collaboration between buyers and sellers. Sales volume is volatile and recently dropped. When we look at year over year sales volume, we see significant fluctuation, including a sharp recent decline. This doesn't mean the market is collapsing, however, it just means buyers are extremely sensitive to mortgage rate movement, pricing realism, inspection findings, and economic confidence. Deals are happening, but they have to make sense. Buyers are much less emotionally driven and much more analytical. Keep in mind, though, when looking at this graph, March still has a couple of weeks worth of closings to factor in, so that massive dip isn't necessarily an accurate depiction. Nonetheless, a dip over the last couple of months still has happened. Price reductions are increasing. We're seeing thousands of listings adjusting pricing weekly, which happens when inventory builds faster than buyer demand. Sellers initially price based on past market conditions or buyers push back on value. Price reductions aren't necessarily negative, though. They're just a part of the market finding equilibrium. This is how markets move from overheated to strategic to stable. The reductions we're seeing are not massive drops, they're slow and steady adjustments. Contracts are strong, but so are back on market listings. Accepted contracts have risen recently, which is encouraging. However, we're also seeing the number of properties going back on the market increase. This is due in large part to financing challenges, inspection negotiations, insurance or repair concerns, and overall buyer hesitation. An important takeaway from this is that closings aren't automatic. They require a higher level of skillful negotiation and expectation management. Prices are still historically high. Even with more negotiation happening, they remain resilient. Average price per square foot has continued trending upward over the long term, and we're still near historic highs. Why? Well, mostly because Arizona still benefits from population growth, migration from higher cost states, limited long term housing supply, and strong lifestyle demand. So while appreciation has slowed, values have not collapsed. And finally, inventory is building. Active listing counts have been rising again, and we're seeing more homeowners decide to move despite higher rates. This is being driven mostly by life events like job changes, family growth, retirement, relocation, or lifestyle changes. More inventory means buyers have more choices, but it also means sellers need to be competitive. Bottom line, the Arizona housing market today is not hot and it's not cold. Buyers have more leverage than they did 2 years ago, while sellers still hold long term pricing power. Negotiation is back, and timing and preparation matter. And most importantly, local expertise matters more than ever, because this is no longer a one direction market, it's a strategic one. As always, if you're interested in hearing about your local area here in Arizona, we'd be happy to send you a breakdown. Thanks so much for tuning in, and we'll see you next month.